I'm Dave Mecklenburg from Tiger Shark Trading. Before we begin, I do want to remind you there's a high degree of risk in trading. If you've been trading for more than one day, you know that you can and will lose money trading. Only trade with money you can afford to lose. Today's guest is Erin Swenlin of Decision Point. You can find her at decisionpoint.com. Erin, thanks for joining us. The webinar is all yours.
Excellent. Thank you so much for having me today. I'm going to be talking about something that maybe not everybody is familiar with, or we've heard the terms, and I'm going to give you some explanation on how to use market breadth and market participation. Market breadth and participation are pretty much the same thing. So as we go through, you'll see, I'll kind of point out when we're looking more at a breadth indicator than a participation indicator, but I'll discuss that. Once I go through kind of what market breadth and participation are and some of the indicators that we use to measure those, I'm going to show you how you can actually use those with some of the charts that we provide to find the best industry groups to start fishing from. So let's go ahead and get this show on the road. My name's Erin Swenlin, as you know. I have a Bachelor of Arts in Mathematics from USC, go Trojans, Master of Science in Information Resource Management. I got that while I was in the Air Force at the Air Force Institute of Technology. And I have been studying the markets. Actually, it's probably more like 35 years since I built this slide. So it's been quite a while. At decisionpoint.com, I am the Vice President and Senior Technical Analyst there. You'll find me a lot of times on stockcharts.com, where I do free commentary, and on Stock Charts TV. I have been a consulting senior technical analyst with them for, well, now it's probably 15 years. Like I said, this slide shows a little bit old. So you can find us in the Decision Point blog on stockcharts.com, or of course, the best place to find us is at decisionpoint.com. All right, so introduction to breadth and participation. We're going to talk about what is breadth and participation. We're going to look at advances, declines, new highs, new lows, price above the 20, 50, and 200-day EMAs, percent rising momentum, percent PMO. We use our price momentum oscillator, so percent PMO buy signals. And all of this can be then put together into our new indicators called the Golden Cross and Silver Cross indexes. And we're finding them to be very powerful, in particular the Silver Cross index. But I'll talk to you a little bit more about that once we get through understanding all the things that go into it. So what is breadth or participation? I use the word or because really they're kind of interchangeable, but basically you're measuring a collection of stocks, whether it's in an index, an industry group, a sector, whatever it is, you're measuring what's going on with that collection of stocks. It's a simple measurement. Generally, there's not going to be any major calculations involved. Now you can, of course, switch around those indicators and then make it a little bit more complicated. For example, I know the McClellan oscillator is often considered a market breadth indicator. I don't consider it that. For me, market breadth is all about simple measurements, just knowing what one stock is doing in relationship to the other, relative strength in a way. We are going to talk about how you can measure advancing and declining issues. I'm sure everybody's heard of the advanced decline line. I'll show you a little bit more of that. And we're going to see how market breadth and participation are a way to measure internal strength. Not necessarily the internal strength of a particular stock, but the internal strength of an index, a sector, an industry group. It also will track whether stocks are gaining or losing price strength. That's pretty much what we're trying to find out. Is this collection of stocks in this collection, and how many are rising, falling, what the volume is for them, different ratios you can use. So advances and declines, we look at the number of advances divided by the number of declines. That's actually the advanced decline ratio. I'm going to talk about the advanced decline line because that's what everybody's most familiar with. It is not written this way with that hashtag or hash in the middle there, the slash mark. Typically it should be a minus. That was my mistake when I typed it in, but it's advances minus declines, basically. That's the AD line. Volume version, so you can do up, down volume, how many stocks had up volume for the day, how many had down volume, and then you can compare those ratios. And now here's the example, and I know it's an eye test and I apologize, but you can zoom in on this later to see, but basically I have the S&P up here. Here is your net advances and declines, and I have the net advances declining volume as well. So we can see that on the day that this was done, April 24th, which was yesterday, I try to update these charts, not all of them are, but you can see on April 24th, we had a spike in the net advances minus declines. There were predominantly declines. What we like to measure is we look and see where that is in relation to 300. That's kind of our envelope, if you will. And when it goes outside that 300 envelope, that tells me that there's been some sort of a climactic event in the market. And yesterday, that's what we did see. Actually, yeah, that was yesterday. So we had what we call a market climax that day. The other things you can look at are the up-down volume ratios and the New York Stock Exchange down-up volume ratio. Here's the S&P. These are the simple advance decline lines. Advances minus declines, that just determines where that line is going to go. Is it going to go up because there's more advances, or is it going to go down because there are more declines? So that is your advanced decline line, advanced declining volume. It's the same idea, only you use the measuring stick of volume, rising volume versus declining volume. So these two lines will often be different. You can see actually right here, we've got a kind of a negative divergence between the two with rising tops on the advances minus declines, but a kind of a declining top here on advancing declining volume. So that's a negative divergence leading in to this decline that we're seeing right now. The up-down volume ratios. I did grab this chart very recently, and so we didn't actually have the updated values here for the New York Stock Exchange down-up volume ratio, but I do have it for the S&P. So basically what we do is we take all of the up volume for the day and divide it by the down volume for the day. And so that will give you the strength on the up-down volume ratio. That gives you the bullish strength, what's going on under the surface there. Right here, this is your bearish one, your down S&P down volume in regards to the up volume ratio. So you can see that clearly today had a clear climactic event here with the net AD volume and with the S&P down up volume ratio. These climactic events, we mark them with a red vertical on down days, downside ones, and green verticals for upside climactic days. So today would be marked with a red vertical line because it is a downside climactic event. Now the question we ask ourselves once we get one of these is this an initiation of a new move, or is this an exhaustion of a current move? So I think this one you could almost read in two different ways, and that is we've been in a decline, we're getting this huge decline bar, and so maybe this is just an exhaustion of a decline. I wouldn't favor that. I would favor this being a downside initiation, meaning we'll see more downside. I happen to be very bearish right now. We had 2 up days and then we got this downside climax. So I would think of it as an initiation climax. So what does this tell me? This tells me that right now I should expect over the next day or two more decline. So this gives me an idea. Do I want to expand my portfolio right now? Maybe I want to close some positions? Do I want to tighten stops? All of this can be important so that you can figure out which way you need to go. Right now, I would say this does look like a downside initiation climax. And so I would be more apt to tighten my stops right now in the short term, or possibly book some profits that I have just to protect myself from what could be another 2 days of significant decline. We'll see if I was right tomorrow. So the market indicators, some of the participation indicators that we use is we look at the price of stocks above their 20, 50, and 200-day EMAs. So basically, if price is sitting above that EMA, that is a tick in the direction above. So you're going to get a rise in the number of stocks above their 20-day EMA. The more of those you get, obviously, that particular line is going to rise. I'm speaking to this. It's much easier to see when you look at a chart, so I won't get too into it. Then I talked about, remember, the price momentum oscillators rising. So the PMO is very similar to the PPO. I mean, if you map them together, they are very, very similar, but we prefer the PMO. Number one, we developed it. And number two, we find that the divergence factor with them, finding the divergences, come into play more often with the PMO. And it just tends to, it's really those divergences that get us, and it just doesn't get whipsawed around quite so much. Then we like to also measure, well, what are the percent of PMO buy signals? I'm looking at the S&P. How many have actual PMO buy signals? Well, that tells you what the participation is going into the market. So these are all market participation because we're seeing who's participating in whatever conditions are going on in the market. We know that if the price is above the 20, they're participating well. Above the 50, they're intermediate term, performing well. If price is above the 200-day EMA, more than likely they're in a bullish configuration, more than likely. The last one are the golden and silver cross indexes. And what we do is we do a combination of the price above the 20, 50, and 200s EMAs. So most of you are familiar with what a golden cross is. A golden cross is when that 50-day EMA crosses above the 200-day EMA. That's a golden cross. So what we did with the golden cross index is we look at whatever group it is. Say we're looking at the materials sector. We look at how many stocks within the materials sector have a 50-day EMA above the 200-day EMA. I'm just looking to see, okay, not only do they have their price above the 200 and the 50-day EMAs, but do they actually have the 50 above the 200-day EMA? Because that is a bullish bias, a bullish configuration if the 50 is above the 200, because price could be above both, but the 50 could be below the 200, and that is a less attractive chart. All right, so let's go through some charts with this. I do have my other indicators on here just because I have them all together and they make sense together. So I'll talk to you a little bit about them, but I won't go into great detail. But we do have the Swenlin trading oscillator and the Swenlin trading oscillator for volume. On this chart, you can see a participation indicator, the percent of stocks above their 20-day EMA. And then we also see what is the percent PMOs rising. How many stocks within the S&P have rising momentum? Well, 2/3 of them do. So that doesn't sound so bad. It's actually not too bad. We like to see participation readings above 50% for an index. That tells us that that index is in pretty good shape if it has 50%. However, when we start seeing a decline in these indicators, that's a whole nother story. These are from yesterday afternoon. Unfortunately, these types of indicators generally don't get posted to stockcharts.com until probably around 2 p.m. Pacific time. So they'd probably be updated about now or in about a half hour. But you can find all of these indicators on stockcharts.com. And of course, you can get all the analysis and annotations to these types of charts on decisionpoint.com. But we can see the participation is starting to fall off here. And this is combined with our Swenlin trading oscillators for breadth and for volume. All of them have been trailing off as well. This was not unexpected to us. We were sending warning signals out back when this red vertical was put together. I think by the second declining day, now it was even before that. It was last week for sure. We notified our subscribers that there were some serious problems under the surface and that they needed to be prepared for a decline. And so far we're right. This is the next breadth indicator. Actually, I'll say participation indicator. This is the percent PMO crossover buy signals. So we looked at how many PMOs, here's your PMO. We were looking at how many are rising, but we now are going to look at how many actually have the PMO above the signal line. How many are on buy signals? Because that's going to give me far more insight than just what the PMO is going to tell me. And as you can see, we've plateaued and we are starting to move lower. We've have this particular indicator breaking below its signal line. So all bad news. This was when we warned our subscribers, the day after these topped, because we already had seen on that other chart, we had already seen our short-term indicators in decline. We were just waiting for the intermediate term indicators to confirm them. And as soon as they did, I was on Twitter. You can follow me at _decisionpoint. And we notified our subscribers right away that evening that there were some serious problems. And while we do have 3/4 of the S&P with a buy signal on their momentum, a lot of them probably look exactly like the S&P, where the PMO is churning, and we're going to start losing even more of those buy signals. All right, market bias. This is where the Silver Cross and Golden Cross indexes are going to come into play. Basically, we look at that price above the 20, 50, and 200-day EMAs. So I look at how many there are above those, and then I compare them to the Silver and Golden Cross index values. Because remember, Silver Cross measures how many stocks have a 20 above the 50. The Golden Cross index measures how many stocks have a 50 above the 200-day EMA. If your participation, these numbers, are lower than these numbers, you have a bearish bias. If participation is higher, I need to fix that slide. If participation is higher, then you have a bullish bias. So what do I mean by this? Well, let's look at a chart, because that always is the easiest way for me to explain things. So here's your Silver Cross index. And like I said, we're finding out that this indicator is extraordinarily powerful. Its tops and crossovers are really powerful. You can just look on this chart and see that that's the case. When you look at market tops, here's your market tops are in the red verticals. The market bottoms are the green verticals. So you will see that, of course, in some cases it is lagging, but in a lot of cases, when you get these tops on this indicator, it leads into a decline. You can see back here, over here. It's pretty prescient. This one didn't turn out quite the same. We did end up getting out on this indicator back here on that top. So we would have had to endure at least a part of this. It's not a perfect indicator, but we would have gotten out to not be a part of this. So this is an older chart, so don't think that the Silver Cross looks like this right now. I'm going to see if I can't get some, I'm going to be doing some live examples. Dave, forgive me. I thought I was going to have everything in here in PowerPoint, but I won't. So let's just cross our fingers I can do the switch when I need to, but I'll warn you when we get there. So this is telling us how many stocks have a 20 above their 50, 30%. How many stocks, in this case, the Golden Cross Index, how many stocks have a 50 above the 200-day EMA? Carl and I, my father, who's the founder and president of decisionpoint.com, we were talking about it today, in fact, what it might look like if we overlaid these two indicators. We haven't done it yet, but I have to wonder what that might tell us when we're getting these market direction changes like we're seeing. So now we have to determine the bias, right? So these are the Silver Cross, Golden Cross. Now we're going to look at each of the values for the percent above their 20, the percent above their 50, and the percent above their 200. We're going to compare them to these. All right, so the short-term bias, I think this chart is pretty obvious and easy. The short-term bias, because these percentages are so low, in this case, the short-term bias would clearly be bullish. The intermediate term bias is when I check what's going on with the Silver Cross and compare it to what's going on with these numbers here for the percent above the 20 and percent above their 50. Like I said, if these numbers were higher, that intermediate term bias would change to a neutral. It wouldn't be bullish until the Silver Cross Index is actually turning up. That's kind of my rule of thumb as I figure out what the market bias is in the intermediate term. I don't want to go specifically just on the Silver Cross and which direction it's going. I want to compare it to what's going on with participation under the surface, because if these numbers are high and this number is low, well, I know it'll turn up because these percentages are higher. Eventually, those EMAs will be yanked upward and have those positive crossovers. So you can see kind of the extra dimension you get with the Silver Cross Index. It's really quite a good indicator. And I wish I could take credit for it, but my dad came up with this one, I think like 2 years ago. And we've been trying to get as much back data as we possibly can. At this point, we have about 7 years of it. And we've turned it over to another company to employ in one of their algorithms, and they're finding the Silver Cross Index is absolutely phenomenal. So now we need to look at what the long-term bias is. Well, this is a little bit, I would have to say mostly bearish here. Again, these percentages are ridiculously low on this chart, and they are below what the Golden Cross is. So we know the Golden Cross is likely going to continue falling because there's not going to be any support here under the surface to keep it rising. So that's a bad sign. So the long-term bias on this chart would also be bearish. So that was in May of 2022. All right, so sector and industry group analysis under the hood. This is what you all came here for, is how do I use this stuff to pick stocks or to find the best places to be in, find out when to be in. And this, my friend Dave, is when I'm going to switch my screen to, all right, so it's gonna switch some weird stuff, I think, at this point, but I'm gonna stop sharing for the moment. Everyone bear with me, it's gonna be totally worth it. Okay, and I'm gonna get over to this page. I'm almost there. I don't know why my computer's being weird. Okay, there we go. Let's get this to that. All right. And we want that one. Woohoo, I figured it out. Hopefully everybody's seeing mine. I'll definitely make these charts bigger. Give me just a moment. But this is, at this point, here's that chart I was talking about with the percent PMO buy signals. But I'm going to make this bigger just a moment. It doesn't want to let me. That's fine. We'll just do it this way. All right, so now we want to apply this under the hood indicators to finding stocks, right? And trying to find the industry groups or the things that we want to invest in. Currently, at Decision Point, we have all of these with under the hood indicators. So we have the S&P 500, 400, 600, the Dow Industrials, NASDAQ 100, S&P 100, NYSE, all of the sectors. And then we were able to add 6 industry groups. So we have the regional banks. You can imagine what that chart looks like. Biotechs, gold miners, retail, semiconductors, and the transports. Dow Jones 20, IYT is what we follow. So I'm going to walk you through, not all of these, I promise, but a good majority of them, because I think they tell us a lot, just because you can now see under the surface on these charts. So let's get a brand new look here on the S&P. Yeah, that's not too bad. It could be bigger, but it's not too bad. So here is the silver cross. Here is the golden cross. Percent stocks above their 20, 50, and 200. I like to add stochastics to my PMO. And the relative strength of the S&P to the New York Stock Exchange. And this is really comparing the large caps to all the cats and dogs that are in the NYSE. So you can tell with this relative strength line, is it the big guys leading, or is it everybody leading, or I mean, is everybody right now, everybody's performing the same because the relative strength line is flat. But if it were to fall, that would tell me that those large caps are actually not necessarily that the large caps are actually leading and the small caps are not, and vice versa. So those that particular relative strength line is always kind of interesting to me, just to see what's going on. But back to market breadth and participation. The silver cross I wrote about yesterday topped. So again, one more nail in the coffin for this market that I told my subscribers about. This indicator is fantastic. The Golden Cross Index is a little confusing right now, right? Because it is rising and it has a positive crossover. Well, as you can see, this is a really slow moving indicator. It gives us an idea of kind of the underlying strength in the very long term, but it's not necessarily going to be a tradable index, if you will, or a tradable indicator. All right, another rule of thumb, something to keep in mind, is when you see the word index after whatever it is, that means it's a collection. That's a collection. Remember, we were talking about collections, market breadth, and analysis. This is a collection of all the silver crosses in the S&P. So it's an index. Just a little side knowledge there. So as we can see, the participation is dropping off the map here. And again, not a surprise after a big decline today, but this was already occurring. We were already seeing this. Once again, stochastics warned a lot of people because a lot of people follow stochastics, but they are pretty twitchy. And to have this kind of confirmation is really powerful. So it does tell me that I'm not going to be interested in expanding my portfolio right now. It's telling me that I might want to consider some shorts. I might want to consider an inverse ETF. It's telling me that I might want to book my profits. Or if I have a position that looks pretty good, maybe I just need to tighten that stop. Maybe I sell half of that position. But it's all warnings. This is all warnings to you. Let's go ahead and look at what's going on with the NASDAQ, though, under the hood. Well, it's not good, as we were seeing. Its Silver Cross Index also is topped. I think that occurred today, so I'm not going to say that that was yesterday. I don't know that for certain, but you can see that the NASDAQ's participation is moving lower and lower, and the participation here is lower than the Silver Cross percentage. So I know that this is going to continue down. Unless we start to see a gain here in stocks above their 20 or 50-day EMA, that number is just going to go down because eventually it's going to erode. Stochastics looking pretty negative. Relative strength is really bad to the S&P. I think we've all kind of figured out that the tech space is really not a good place to be at the moment. So looking at this chart and looking under the hood, I would say I'm not interested in the NASDAQ right now for investments. And I'm probably interested more in shorts in that area. Let's look at the S&P 600. On the S&P 600, well, PMO top already had problems. The RSI has been negative forever. It's clearly looking worse than those price charts we saw for the S&P and the NASDAQ. Notice that participation is completely falling off the map here also. It was already not very strong. Silver Cross Index topped. Stochastics falling, of course. Percent above their 200-day EMA. It's looking pretty weak here. And it's comparing the S&P 600 to the S&P 500. It's been underperforming since March 1st, pretty much. So we know that we don't want to have small caps, or we know that at least we need to be watching, being more careful. We already knew that with participation already starting to thin. So that's why these under the hood indicators are just so darn powerful. Let's go ahead and look at the tech space. All right. So rising wedge, it's bearish. So we already see that we're falling and could very well break through this rising trend that forms the bottom of that bearish rising wedge. We already had a PMO sell signal here on technology a long time ago, long before this decline. We were already seeing, notice back here at this market top, look what was happening to participation after that, just totally falling off. You already knew there were problems under the surface. You know, when these percentages get this low, I mean, personally, I don't like to invest in stocks that are below their 20 or 50-day EMAs. I just don't. Well, there's not a big selection here. 12% are above their 20-day EMA in the tech space. That's not a whole lot of choices. So a lot of these things are already telling you, again, the signs that this is not a good place to be. So again, tech, not really where I'd want to be. Where might I want to be? Well, let's look at some defensive sectors. I think that's a really good place to start. Utilities. Utilities, certainly price looks pretty good, but what's going on under the surface? Strength is going on under the surface. Look at the difference in participation here of stocks above their 20, 50, and 200. Look at the Silver Cross Index at 90%. 90% of the utility sector has a 20-day EMA above its 50. That is very strong. You have 63% in gaining of stocks with a 50-day above their 200-day. So the strength is building here. There's strength under the surface in the short and intermediate terms to keep this going for utilities. It was a pretty ugly day. Utilities were only down about 0.1%. Stocks moving above their 200 is actually gaining. So definitely a different look here in utilities. And maybe you didn't know that, you know, it's bad in defense. This is a defensive sector. I'm sure everybody here understands that. But maybe you're kind of, well, what about industrials? What about real estate? You know, again, you can just go in here and take a very close peek. PMO top today, that doesn't look like that looks new for industrials. Industrials participation is falling off of the map right now on all of these. They're below 50% readings here. The Silver Cross, it looks like it's kind of rising here, but look at these percentages of stocks above their 20 and 50. It's falling. There's no way this number is going to get bigger. It's going to more than likely fall. So we should be prepared for more downside here for industrials. This is not the strong sector. You can see that it was trying to gain relative strength here, but it's starting to fall off the map. So I have to say that's not a good spot. I'm always interested in what's happening on energy. And again, I hope you're liking these examples, because I think real life now examples tell you what this indicator is all about. When we do our decision point alert, we look at the same charts every day in it. Not these. We have a headline, and then there'll be a chart of whatever sector, something that's caught our attention, but the rest is all the same indicator charts. The Golden Cross, Silver Cross, participation, that climax chart, the Swenlin trading oscillators, we have them every day so that you can see how the indicators actually work. If I pull that chart out now and then, it's not going to be that helpful to you in figuring out what to look for. And I do want to make you self-sufficient. that is my job. I consider myself more of a teacher than anything else, and I want to see those who invest in my service to do well. All right. So energy not looking too good, and I know we had a really nice spike yesterday in crude oil. I was having trouble believing that it was going to turn into that much. We did, you can see right here, got that little bump on the stocks above their 20 and 50. We did get a little bump there. Silver Cross Index didn't do anything. It's actually in the process of turning down. So that tells me there's some problems that maybe I didn't recognize. I know a lot of people were getting pretty hot on energy, and at this point I would say I wouldn't be looking for that rebound just yet. There's not enough participation under the surface to support it. Actually, let's look at consumer staples. Let's look at financials. Yes, let's look at financials. Okay. Full disclosure, I do own an inverse of XLF, so it was a nice day for me today. Make up for what I've been seeing currently out of that particular sector. But now we have a PMO top beneath a zero line. The Silver Cross was starting to gain some strength, but notice that participation had already started to drop off. Again, I mean, the market was still kind of, moving a little sideways here, but financials were already starting to top, and you could see very quickly how the participation has really dropped off. These percentages, this percentage, I should say, the percent of stocks above their 20 is higher than the Silver Cross. So that could bring more 20-day EMAs up above some 50-day EMAs, even if price isn't quite located where we want it to be. So we know that participation is falling, and so this is certainly not a place I would be looking for a reversal. If anything, the financial sector would probably be a good place to look for some shorting opportunities. Now we'll look at consumer staples. And then I promised to look at, let's see, I've got a few more minutes. We'll look at those industry groups, and then I'll show you how you can drill down a little bit on stock charts and you can find those stocks really easily. All right, so consumer staples, a nice breakout. I've been favoring consumer staples in my decision point diamonds, where I give everybody a stock picks, I should say, 10 per week. On Fridays, we go over all of the picks for the week for the last month and just see what they're doing. But I also pick a sector to watch and an industry group to watch. And this week I picked the consumer staples sector. It was looking good on the breakout on Friday. So it was a pretty easy choice to me to pick it as a sector to watch. I think this sector still has a little bit more life in it, basically because we still have pretty good participation under the surface as far as stocks above their 20 and 50. I mean, that really hasn't done anything. The Silver Cross did top, but I have to say that when you're talking about a sector or an industry group where the collection of stocks is smaller, when that sample size is smaller, you do see some twitches. So we don't want to read too much into this topping SCI, particularly because these percentages of stocks above their 20 and 50 are higher than that percentage. So there's still a good chance that the Silver Cross could continue to rise at this point. And looking at the Golden Cross at 56%, and we've got much higher readings above their 50 and 200-day EMAs. Those percentages are really very bullish. and they are higher than the Golden Cross Index's value. So I know the Golden Cross Index will likely continue moving upward. Look at the relative strength here on consumer staples. Like I said, it wasn't that hard a choice this last week to pick the sector to watch, particularly since our indicators had us moving so bearishly. All right, so let's dive into a few industry groups here. If there were any sectors you wanted to see, certainly put it in the questions and I can come back and look at them. Let's look at regional banks. Regional banks had formed a bullish falling wedge, broke out, but immediately have failed and are now hitting lows on the year. PMO is topping well beneath the zero line. There's like no stocks basically with a 20 above their 50. The participation here, we had a little bit of a heartbeat going in out on this breakout, but it wasn't enough for me to get bullish on this particular industry group. I did not. Certainly we're seeing the failure again. I do not trust the financial sector in general. Certainly the banks are a big problem, but the problem for the sector is that the banks managed to drag down quite a few of these industry groups within. They may not have had direct contact with, the banking service industry, but, insurance and such. The baby was thrown out with the bathwater. I don't want to be involved in financials because I still think that this banking crisis is going to come home to roost. It hasn't finished yet. And so I would not be putting money into a possible reversal on these. And while I know that you can probably show me a bunch of financial charts, stock charts that look good, but I'm just intuitively, I can't put my money somewhere where it's got that additional risk of falling, even though it's no fault of its own. So that's why I'm not involved there. But you can see regional banks have just really, they were already starting to peter out over here. You can see the participation, but then we got this and it was just all over with. Biotechs, full disclosure, I do own biotechs. So I had the Great Hurrah and the XLF inverse, but I don't have that on the IBB. This one, looking at it, I have tightened up my stop. It's at the 200-day EMA, but I don't know that I'm going to necessarily need to wait for it. Look at how the participation just really fell off the map. We were still looking at rising trends until the last 2 days. So stochastics dropping below 80 is another problem. Silver Cross Index is flattened, but the fact that participation is dropping so quickly of stocks above their 20 and their 50, this is going to start to top even more. We're going to see it move downward. IBB looks very suspect right now. I think we do have a chance for a bounce off this 200-day EMA, which is, like I said, where my stop level currently is, but I don't know if I'm going to wait till that stop level hits. We've got a double top. There are a lot of bad things going on this chart, so time to go reevaluate. Gold miners have been the darlings, have they not? Oh my goodness, no stopping gold miners. They finally pulled back. I was really excited to get involved, and then I noticed participation was still dropping. And yes, we're getting a reversal. It's right here on support, so this is probably a good time to buy, but I'm just not going to be interested until I see this start to move upward. This is a nice start. We got the percent of stocks above their 50. That's a good start, but now we need to get them above their 20. So that's what I'm going to be waiting for on gold miners, and we're not seeing that yet, but certainly relative strength looks like it's getting ready to pick up. Stochastics really haven't gotten involved yet either, so that would be another reason I would kind of be holding off on a gold miners play here. XRT, the retail looking pretty good here. Well, not today for sure, but we saw that the participation, while it was pretty thin, was staying pretty even. Now we're seeing that it's dropping off, and that's going to be a problem. All right, 2 more, and then we'll get right on into the industry summary that I wanted to show you. I think this speaks for itself. Semiconductors hit the top. We're really enjoying some great participation. Silver Cross Index fell, had a crossover down here, and that would have saved you quite a bit of heartache. The transportation. All right. Also seeing this pulling back in terms of participation, not liking that. Stochastics falling. Look at the relative strength. Silver Cross is still rising, it looks like, but given these percentages at 15 and 25% are so much lower than 30%, this is going to top very soon. All right. So just a quick one, and I believe free members are able to do this as well. Unfortunately, I didn't have any of those industry groups I really liked. That's unfortunate. So we'll just go into consumer staples, which is where I'm looking for pretty good. I think that looked good as far as the sector under the hood. So it's time now to kind of find some stocks here that would ride the tide. So you can go to the industry summary, and it's on the home page. I'm sure, I mean, the charts and tools page, like I said, free members should be able to click on the industry summary. And then I could see all of the different industry groups over here. What it does is it highlights them and shows me the chart on the left. So I can just click through and look at what looks enticing to me. And wow, soft drinks look pretty good here. Let's go ahead and look at soft drinks. If you come down here and the very last button, this will give you all the stocks that are in that industry group. I also include the stock charts technical rank. Pretty soon we're going to be able to include the PMO as a column. But for now, I use the stock charts technical rank. It's a really good relative strength indicator. And then it brings up the stronger stocks to the top. You can just hover over the symbol and you can get a really good idea of what looks good right now. And I have to say, Coca-Cola, look at the Euro-Pacific partners, looks good. Look at that really nice move. PMO rising, not quite overbought. RSI is overbought, but this is one of those probably the winner that keeps on winning. When you see this kind of relative strength going on under the surface, that looks really good. Let's look at just Coke consolidated. This looks very interesting as well. Nice basing pattern here. We've got stochastics above 80. We have the PMO rising sharply. This looks very nice for Coke. I know the Pepsi's in there. Let's look at Pepsi real quick, because if we're going to look at Coke, we should look at Pepsi. And really nice breakout move today. So PMO bottoming above the signal line. I call that a surge, a PMO surge. So we're getting a surge on the PMO on this really nice purchase. And if you watch some of my other presentations I do elsewhere, you will learn how to time that entry and exit to make sure you get it at the very best price, because it was up quite a bit today. More than likely, we'll see a little bit of a pullback. And if you use a 5-minute PMO chart, you can time your entry. You want to see that PMO crossing to the upside, the 5-minute PMO, positive RSI, that's a buy point. So we're pretty much right around the buy point right now, but if it falls back down to that 189.90 or 189.25 level, that could be a very interesting one. All right, let us get back to, I need to stop share. I'm going to go back to my presentation here. All righty, I can get to it. That doesn't look right, but I think that's close enough. Yeah. Okay, so, well, there's the end of it. I wanted to go all the way through to give you all the information and the really good special that I have for you at the end of this presentation. So let me get there. So I do work for and run decisionpoint.com. And as I said, we have 2 reports that we do, the DP Alert, which is going to give you all of those Golden Cross, Silver Cross charts. You'll have DP Diamonds, and that's where I pick out stocks, like I just picked out Pepsi for you or Coke for you. That's what I do for Decision Point Diamonds. I also have, as you can see, a live trading room that I do on Mondays for Stock Charts TV. If you go to my website, you'll see my smiling face. You can click on it and it will help you register for that Monday trading room. It's a Zoom room. The recordings, if you can't attend, the recordings are up on YouTube on the Stock Charts TV YouTube channel. So you can look for Decision Point on the Stock Charts YouTube channel, and you'll find lots of presentations and workshops that I've done. But if you want to try us out, I'm going to let you save 50% on your first month. We're already priced very low. You can get both of our products for $119 a month, which is just really low compared to my competitors. But that's where I want to keep it. I want to teach people. I want them to become self-sufficient. And that's the best way I can reach people, is by making it affordable. But I'm making it even more affordable. So just use the coupon code SAVE50 at the end of the checkout process, and you will get your first month of Decision Point reports for 50% off. If perchance you would rather do a trial, I do offer a 2-week trial. The coupon code for that is DP trial and the number 2. I thought I had it on here, but I don't. I apologize. So the coupon code for the trial is DP trial and the number 2. And if you want to just dive right in, save 50% and get those reports for a full month at half off. That is all I have for you today. I hope you enjoyed it. Are there any questions that I can answer? I know I kind of filled up the time.
A couple questions for you. What's your typical holding period?
My typical holding period, I used to be an intermediate term investor, but doing DP Diamonds has really brought trading to the forefront for me. And so now I'm more of a short-term trader. I typically will still hold stocks at least about a week or 2. Typically, I'm not usually in and out a lot. I have too much to do, unfortunately. So yeah, typically that's kind of my range, is from like 1 to 2 weeks to, I think I have a couple, well, I have a few buy and hold positions, like gold I have as a buy and hold. I've had that for years. And then I have positions that are in that buy and hold arena, and I've owned them for months. So I kind of I do it all, if you will. I have different accounts for different time frames, is basically how I work my investments.
So on these 1 to 2 week holding periods, are you always buying the stock, or are you using an
I
option?
typically am a buyer and I don't short. When I get to what's going on in the market, like right now, I usually will turn to those inverse ETFs, inverses of the sectors. I'm involved with an inverse on bonds, or have been. PFIX is one I like to trade for interest rates. When I feel like interest rates are going to rise, I go into PFIX. Trying to think of some others, but typically I'm not going to be a shorting someone who shorts. I will present shorts in DP Diamonds, but I know most people do like to be on the buy side. It's not an options trading system by any stretch of the imagination. That go to Simpler Trading. My friend Mary Ellen McGonigal, Danielle, will help you out over there. Yeah, Danielle Shea, but I'm more for that short-term trader who wants to kind of get in and out, maybe hold a few things for a little while and then get out of a few things, sort of I like to keep my portfolio exposure. I like to keep it at 30% to 80 to 90%. Right now I'm at 30, but I'm getting ready to pare it down probably to 18 or 15%. So I really do a lot of the, I guess, position management in terms of how much I have laid out there. That's kind of how I play it with the bear market.
And is there a easy way to get all those indicators on your charts there at Stock Charts? It's part of a subscription and then maybe sign up for your stuff, or how do people get
Yes.
those indicators?
You would need to sign up with us. Actually, let me see if I can't share my screen again. I can get to where I want to be, because that'll show what you need. If I can get to the, nope, I want this one there. Okay. So yes, if you go and subscribe to our website and go to this blogs and links page, here are the chart lists. And the one you're going to want to look at is this one that says sector chart list. We're in the process of renaming them. This is going to be the under the hood chart list. We're getting ready to put in what we call an ETF tracker chart list. It's got about 115 or so ETFs that kind of cover a wide range of the market. And they will have those, won't have under the hood indicators, unfortunately, because Stock Charts hasn't ground those out for us. But the sector chart list is where you're going to find these charts, all available, all annotated. Carl annotates these and looks at them every single day. So you're seeing what he sees. If you want the chart without all of our annotations, you can certainly come to our website, subscribe. If you click on these, it will bring it up on your Stock Charts workbench. So you can save them into a Stock Charts chart list, but at that point, you do need to be a Stock Charts member. But you don't have to be a Stock Charts member to see these charts. They're all here and they're all annotated for you. So I think it's a pretty nifty set of indicators. And like I said, we have them for a lot more of these. And all you have to do is click on them, and that'll bring it to your Stock Charts desk. So, but the annotations will not continue to update if you download the chart. So if you want the updated annotations, you do need to stay a member of decisionpoint.com.
All right, looks like we're out of questions. I want to thank everyone for joining us. Again, I will have a recording for you guys. Generally takes about an hour after we end here. So look for about an hour. Maybe I need an extra hour here because I might have to piece a couple, do some edits on this recording to get all the pieces to fit together. So look for it an hour or two. I want to thank Erin for joining us. Thank you.
Yes, you're very welcome. Always a pleasure.
All right, and again, you can find her at decisionpoint.com. Thanks a lot, everybody.